Hello everyone, welcome back to another episode of Decoding IPOs by the Finance and Investments Head, Kirori College. Today, we will be discussing the Vikran Engineering IPO, covering company background, IPO details, subscription updates, and whether you should apply. So let's start with some basic details about the company. Vikran Engineering Limited is an engineering and fabrication company that handles design, erection, and commissioning of heavy structures. Its client spans across infrastructure, power, oil and gas, and construction. Now let's start with discussing its IPO details. Its issue period is from 26 August to 29 August. Face value is of 1 rupee per share. Issue price is of 97 rupee per share. It has a lot of 148 shares. Total issue size is up to 772 crores approximately. Fresh issue shares are 721 crores and offer for sales shares are up to 51 crores approximately. Fresh issue shares means the money directly goes into the company, and offer for sales means promoter selling part of their stake. This money goes to them and not directly to the company. This is the major difference between fresh issue shares and offer for sale. Now let's discuss the company financials. As you can see here, revenues have been growing steadily. Margins are moderate, squeezed by raw material costs. The company carries significant debt, which is a concern in case of a downturn. Returns are okay, but not very much industry leading. Now let's discuss its key performance indicators. Revenue growth is healthy, margins are stable but thin, and that is on the higher side. ROE at 16.63% is decent, but could have been better. Now let's look at the demand so far. Subscription tells us how many times investor applied compared to available shares. As you can see, QIB means qualified institutional buyers like mutual funds, banks, insurance firms. So they have shown relatively low interest. Uh, this, shows, this shows clearly strong demand from HNIs and retail investors, while large institutions are clearly more cautious. So let's look at its GMP. The grey marketing premium is the unofficial market where IPO shares trade before listing. It gives us a sense of expected listing price, though it's not always reliable. As of 26th August, the GMP for Vikran Engineering stands at around rupees 13 at the upper price of rupees 97. This hints at a listing price of rupees around 110, giving 13 to 14% potential listing gains. But remember, GMP has dropped from rupees 21 to rupees 13 in 2 days, showing this shows clear variability in the GMP. So now let's have a look at its main IPO strength. It has a consistent financial results and varied order book across company verticals, model of asset light. Now, what I observed from, uh, according to me, its major strengths were healthy HNI, healthy HNI retail demand, strong order book implies visibility of future references, and uh, its main strength was long track record in engineering projects. Now let's have a look at its IPO's weakness. An increase in the price of raw materials would affect the company's profitability. In India, the EPC sector demands a large investment. This, together with high borrowing costs, may restrict the EPC's industry's ability to build. Apart from that, the weaknesses I observed was debt-heavy balance sheet. The GMP trend is currently weakening, and too much dependence on infrastructure spending cycles. So that's were the major weaknesses that I observed. So let's come to the final take. Should you apply? For listing gains, yes, attractive with 10 to 15% upside possible. For long-term investment, be cautious as high debt and cyclical risks remain. Let me tell you my take. Apply if you are looking for short-term listing gains, but reassess fundamentals if planning to hold long-term. That wraps up our analysis of the Vikran Engineering IPO. Will you be applying? Let us know in the comments, and don't forget to like, share, and subscribe.